Good morning. I hope you're doing well and welcome to today's edition of 600 Seconds of Trading. It's 9 a.m. with 13 minutes in London, and welcome to today's edition of 600 Seconds of Trading. As we usually do at this time of the day, I'm going to take a look at the main markets to provide you guys with a quick update on what's going on. Also going to talk about trading strategies, trading setups, and I'm gonna share with you guys my view on the market. But please note that this is made with an educational purpose and not to be viewed as buy and sell recommendations. Also, as you've probably seen online and places like YouTube, people make it think that it's really easy to make money. Trading, I would guess and I would say that when you know what you're doing, it becomes definitely easier. But it's not like a normal job, right? You just clock in and then you do your hours and then you get paid, you go home. It's not like that at all. So please put that in mind, and that we can all lose all of our invested money. Alright, so let's just get going, and we'll begin with the euro. And the euro was very close to taking out its May low, which was pretty much at 115.08. The market traded more or less as low as 115.07. I had a limit order myself to sell at 115.05, and the market almost triggered that, but it didn't actually break. And now, because of that rejection and because of the Philadelphia Fed index published yesterday, because that one was softer than expected, the euro dollar moved up, and then the market is now heading to the upside. We just took out this level, which is the short-term high, so the short-term trend defining level, and this is high from the 18th. And what we're experiencing right now is a break above this high, as people that shorted here are abandoning their bearish view, and this market is now pushing to the upside. Could potentially push all the way up to the June 13th low at 117.24, and you can see that the market bounced off from these levels several times here on June 8th, here on June 13th, and here, June 8th, June 13th, and then I guess June 11 as well. So this is support that could potentially turn into resistance. Now, if we just take a step back, and it's always good to have an eye on the big picture, then you have this major high here, and we need to remember, why did this happen? Well, it declined on the back of the ECB rate meeting and their dovish outlook. So this is quite an important level, and this is sort of the longer term trend defining level. So in the short term, as I said yesterday, I think we can go up, but then we will need to see. My preference actually is that this is going to go up, and then this is going to go lower again. So I am bearish, and I'm going to resume a bearish position from here at 16.92. Remember, I was bearish on the break and on the corrective move, and so far none of these setups have actually occurred. If we take a look at Bitcoin, then Bitcoin is moving lower, as I was suspecting. I never know for certain. I only know what a good setup and a bad setup is, and then I try to stick with those. And I also know what a very good setup is. And on very good setups, I trade usually a little bit more aggressively. But here, this should not come as any surprise. As I've been saying, the market is in a short-term downtrend below 69.24, and I said that this reminds me a lot about crude oil, which tumbled after having this sort of corrective move. Now the bearish view I share with you guys is back into profit, and as long as trade below 69.24, again, no change to the outlook. I suspect we're going to go down to 59.19, and then we'll see if this market would like to trade to the downside. If you look at it from a big picture, you have a symmetrical triangle, and the market just took out support here, and the difference between this level and this level here is more or less difference between this level here and this level here, which projects a decline down to about 3,553. Here is crude, and sorry, gold, And gold, I am happy to maintain a bearish bias here. As you might remember, on the break of this level up here, I said we could probably trade down to 1250, and as well, sort of the main idea was break here, goes down to October 17th low, October 2017 low. Now we traded below that level, and not necessarily a successful break, but the fact that we traded below it opens up for a further decline to the December 2017 low. And as long as you trade below this level here, which is 1287, I suspect traders are going to be quite keen on selling between 1268 all the way up to 1275. Here is crude oil, West Texas. The market moved down, so this is sort of the analogy with Bitcoin. The market was heading to the upside, and it moved down, and Bitcoin is sort of halfway and has more to decline. Now, I resumed, or not resumed, I mean, the market moved down, right? And then moved up. And this is sort of a level where the market should look to reverse. Now it's on the wrong side of this range, but still capped by this high, which is where the stop should be at the trend defining level. And the market is sort of back doing something like it did here, which is static correcting. If the fact that we're moving so close to the high sort of is a warning sign that this might not work out. But if gold is a reminder for us, or the market traded sideways for quite a long time, but eventually just moved to the downside as projected. So no reason to change your bias here in crude. Obviously, take out this high, and we're probably going to target the next high, which is 66, 67. Here's the German DAX. The German DAX just traded below support and could potentially move a little bit lower, maybe target this level, which is the May 25th low. But we're dealing with an market is trading sideways, so I really wouldn't bother with this market. There's not much happening here. There are other stuff that are much more fun. S&P potentially bottoming out. Like, I'm long the Australian stock market since this week, and I'm up quite a bit. So Russell 2000 as well. I traded that in the beginning of the month, and I made on the Russell 2000 and the S&P 500 on both those positions. I made a return about 13% on my portfolio. So there are good markets, but the German DAX is not one of them because of the situation here. And it sort of depends as well, sort of what attitude you have towards trading, or sort of your style. So I trade patterns on charts, or trend. I'm a trend follower primarily, so look for the formation of new trends or getting involved in already established trends. So when I look across all the different charts, I just look for trends, and clearly there's no trend. And I know that because I'm using a trend following system, they don't work on range bound markets. So I'm not gonna give my money to the to the market here. Rather skip to the next one. Okay, let's see if we have any questions or comments. Good morning, Mauricio, and good morning, Antonio. I hope you guys doing well, and thanks so much for joining this morning. If you two fine gentlemen have any question, or anybody else have a question, then just pop that in the chat box, and I'll try to do my best to answer them. If not, we're gonna wrap things up. Don't forget to check out the technical analysis section. There's some setups here by Nathan, and we also have some setups and ideas here by Yuri and myself. There is one here that you should definitely pay attention to, and is this one, New Zealand dollar versus the USD. This is a weekly chart, and this pattern suggests that the New Zealand dollar versus the USD can decline with about 9.5% on a break to 67.89. So that's something I'm keeping my own eyes on as well. It's a nice little pattern. Doesn't have to work out, but potentially when it goes down, we could potentially sell. Stop loss goes on the other side, and then if the market moves down, we're looking at a very nice risk-reward ratio here, and a very nice and cool sort of trading. My trading has evolved, and it's not important that it evolves, but sometimes things just evolve. To give you an idea, something I would not have done in the past, but I'm starting to do now. For example, this is the Australian stock market. I bought this market on the break here because a similar pattern like you'll see on the New Zealand dollar, which is that the market is trading within this rectangle. And usually when you break like a massive rectangle like this, you get one time the range. So you see here the difference between the low and the high is one rectangle, and I just add the one on top. So I'm going to try to keep this one, even though I know it's quite a aggressive move. It's about 8.5%. So I mean, if I get 5 or 6, I'll be very happy. And I executed this position, and hopefully I won't need to do anything with this market in the next few days and weeks. Very similar setup is the US 2000, which is the Russell 2000, and here on this weekly as well. Look at this. Now I got out too early, but I don't really care too much because I got out in the S&P as well, and the S&P, as you know, has moved down and would have been a losing trade. Here as well, this is a weekly pattern to some extent. Let's see if we can look at the daily. So this is the daily. You can see that the levels are a little bit better defined here. The different ways of measuring, should you include the spikes or not. But if I sort of grab the bulk, the meaty part, then this would be a 8.64% move. So it suggests that we can go up to 1750. And I went long. I didn't catch it on the breakout here. I catched it here, and then it went up like that. So I catch this move. And then in the S&P, I catch this move. From here up to pretty much here somewhere. Okay. Alright, so we don't have any questions. Antonio, Maurizio, thanks so much for joining me this morning in the chat box, and thanks everybody else that is watching the presentation now or that's gonna watch a recording. Don't forget to click on the link, and don't forget to click on the like button. Alright, have a good day guys, and I'll see you guys on Monday. Thanks.